Hello, I'm J.W. Najarian with Commercial Real Estate Distressed Assets Association, and we're here with Leonard Manriquez of ALB Commercial Capital and also Commercial Asset Management. Hello, how are you doing today, Leo?
I'm good, J.W.
Great to have you here.
Thanks.
You know, we've been working with the Commercial Real Estate Distressed Assets Association for just over a year now, and really appreciated working with you. But I want to talk to you today about ALB Commercial Capital and Commercial Asset Management. You have two companies, right?
Correct.
You're the president of both these companies, is that correct? I want to find out, what's the difference between these two companies?
ALB Commercial Capital is a commercial banking, commercial originations on commercial loans. And it's the parent company, and Commercial Asset Management is the special assets division for ALB Commercial Capital. We call it CAM, which is involved in asset management, outsourcing of distressed commercial real estate.
Okay, great. So ALB Commercial Capital was started when?
In 2000.
Okay, so
about 11
years now? Okay. And you do mainly, you're a correspondent lender working in all the states that your lenders work in, so probably you're able to hit, what, all 50 states?
Well, we act as correspondents primarily. That's a position we choose to be in. Mm-hmm. But whether we are or not, dependent on the loan program, it allows us to go into other states. So we could hit potentially all 50 states, mm-hmm. but I'd probably say that we are predominantly in the 7 Midwestern states.
Oh, okay. And you're doing what size loans?
Our average loan size is 1.5 million, right in there. So that's
okay. What's your high end?
We can go from 500,000 on up to 15, 20 million. Okay. But I would say that our average loan size is about a 1.5 million. Average annual production was 250, 300 million on originations.
Okay, and what type of properties? We're talking retail, industrial, multifamily. What different areas do you work in?
All. Our biggest appetite has always been for multifamily. When we first started ALB Commercial Capital, we were doing exclusively apartment lending, mm-hmm. and but as a result of the clientele that we dealt with, it caused us to start doing the other property types: retail, office, light industrial, motel, hotel, or mm-hmm. owner-user. In addition to the lenders that we were working with, the loan programs that we were, their loan programs that we were corresponding for, they had, besides having apartment lending programs, they had programs that would allow us to lend on the other property types.
Right. And, okay, so you started around 2000, so you saw the big build up to the bubble, you saw the crash.
Sure did.
You know, felt it. You felt it, yeah, as we all did. Mm-hmm. So the crash is around what?
Summer 2008.
Right. Okay.
That's when I really, if I was to put my pulse on it, that's when I really felt it the most.
Okay, so you and I have friends in the industry mm-hmm. who really got hurt at that time. Mm-hmm. They were over leveraged. They got hurt. Mm-hmm. You stayed afloat.
Sure.
Why is that?
Well, I think we're pretty conservative. Mm-hmm. In business and in life in general, we approach everything very conservative. In commercial lending, we had been in the market, so we had built up a reputation for being able to provide commercial lending. So although the market crashed or went down, there was always still some activity that was going on. So we were one of the players that was in the market, servicing the market. Mm-hmm. So it allowed us to live. We had the financial reserves set aside that as things got tough, we were still able to move forward. Right.
And I understand, even though 2009 was, as you say, and I heard you say before that 2009 was a great time for commercial real estate people to
go on vacation.
To go on vacation, yes. Right. You stayed afloat then, and I actually know towards the end of the year you were actually starting to do deals again into 2010, and mm-hmm. So were you actually getting loans done, or did you just have a lot on the books, or what?
Oh, well, we've had loans. We've originated and closed loans all throughout the whole year. Okay. Just not as much as it was before, but a sign of improvement showed at the last quarter, 2010,
right,
where we saw more deals that were starting. Some of those deals closed prior to the year's end. Some carried into this year.
right. And okay, so you've been seeing deals go through all during this upheaval. What do you make of the banks? Are they easing up? Is their criteria easing up? Is it tight? What's going on with the banks?
It's a different environment, and I don't think the old environment's coming back. So it's just something we deal with. Underwriting's scrutinized. So to get a transaction done now, you're not just simply underwriting the property. That borrower is going to have to qualify as well. Where you're looking at a lot of, besides their credit, their debt to income ratio, their experience in the property.
Mm-hmm.
Do they own any other commercial property, or is this their first one? So that's a given. The market crashed, and a lot of it had to do because lenders were competing for the business, and when they were competing for the business, they were actually being very lenient on their underwriting.
Mm-hmm.
And as a result, we had a big problem. When you're doing stated loans on commercial and you're underwriting at a negative debt coverage, you're asking for a problem. And so the CMBS market is a good example.
Yeah, excellent example.
You have all these loans that have gone delinquent. A lot of these clients, it's one of the markets that we tap into now, looking for new loans. But we find is there's some that will qualify. Mm-hmm. But it also turns into loans that we're able to help the guy or the investor with potentially a workout, or it's an investor that's going to have to sell and do a short sale, or it's going to be something that ends up as an REO.
Mm-hmm. You've also been doing SBA?
Yes, SBA. Mm-hmm. SBA I think was a real savior for the commercial, as far as commercial lending, mm-hmm. On the other types of properties besides multifamily, for owner-user. Because a lot of the capital sources just pulled out, and right. You would get a rate sheet. There was, if they had commercial on it, they were saying until further notice, we're not taking any commercial loans.
Wow.
But SBA was a real savior because one, our economy is bad, so we really needed to help that business owner. So through the SBA programs, it was able to help business owners get into a property. So if you had a good business and you could not afford a property before because the values were so high, it's
mm-hmm.
an actual, it's a great time to go ahead and buy something now, as long as your tax returns are good, mm-hmm. and you have, and it's not really a matter of down payment because SBA you can get, pretty highly leveraged, but yeah, so SBA has been a really good loan program.
Okay, so let's move over to distressed assets. Mm-hmm. Commercial asset management, CAM. Yeah. You work as an asset manager. What does commercial asset management do for the client or the lender, or both?
We operate as an asset management firm, mm-hmm. or outsourcer, and really what it allowed us to do was to help lenders in a number of ways, not just with an REO. It allowed us to get way upstream with the lender, and more initially as a customer outreach approach, where we're helping them with any of their loans that they have on their books that they potentially would like to get off their books. Mm-hmm. And we talk to the customers and pre-qualify them. Right. If it works, we can take that loan to another loan program, we would. But during the dealings with the customer, we may find out that customer wants out of the property, where we can potentially have that assigned to one of our brokers within our network as a REO, not as REO, as a short sale. Or we can help the lenders with their non-performing notes or the performing notes. So through the asset management division, the CAM, mm-hmm. it really allows us to work with our lenders relationships, but on a different level. And then more importantly for us, it allows us to continue to work with the lenders, the investors, the brokers, and continue to build our base of all of those members.
And in fact, you're going to be working with people you haven't worked with before, lending wise, right?
Yes, yeah. It's great when you can meet a new lender, helping them in the distress side, but then finding out that they have a pretty unique loan program.
Right.
So it's a kind of a win-win for us.
Okay, so you see hopefully some money easing. The banks are giving more programs that they didn't have before, so that's positive. You've seen more deals come by. You're working in distressed, and I know the banks have been tight about letting go of assets. Do you find that to be an issue?
Letting go of well, you know, there was a lot of that extend and pretend. You know, right. That's for sure. And you know, there's been a real paradigm shift in the capital markets, where if you were trying to get to assets, assets are being characterized as lender controlled. So you really need to get in contact with the lender, because you know, they had the assets, and they had a lot of these non-performing assets, and they weren't just, you know, foreclosing on the clients. They were trying to potentially work things out with the clients. But
well, even the REOs, they weren't letting go, because they were hoping, prayer upon prayer, that the market would come back somehow.
Sure.
They didn't want to let it go for a song necessarily.
Sure. I see a lot of things happen before it gets to REO. That's for sure. You know, there's a lot of transactions that happen before it gets to REO. But there's some of the, you know, where you just can't avoid it. You know, you've tried everything from doing a loan workout to potentially selling the note to even selling it as a short sale, but it just ended up ultimately as an REO. Would you rather have seen it go the same route as it did in the 90s with the RTC, or 80s or 90s with RTC? No, I think the way it's going, we're in a different market, and I think it's just working out the way it has to work out.
Okay. So going forward, how do you see unemployment being? It's a big problem. It's a big problem, absolutely. If that can ease up, do you think things will get better? If it doesn't, do you think things will stay the same or get worse?
Well, you know, in commercial real estate, employment it heavily affects commercial real estate, because you know, if you have businesses going out of business, you have increase in vacancies, which decreases the income that's coming in on the property, which ultimately decreases the value. You know, I mean, so employment is a key factor.
People make less money. They can't afford rent.
Exactly.
Family has issues.
It just snowballs.
Right.
So employment's a huge factor. If we can get employment to improve, it by far would improve the market.
So ALB Commercial Capital is essentially going to stay conservative, and you know, only do good loans and help people, help customers out with their distressed assets, help banks get rid of distressed assets.
Right. We're going to continue to provide loans the loan programs that are available in the market, and continue to remain in the market that we've been, you know, in with for the last 11 years, and we're going to continue to build upon the distressed side of the markets.
Speaking about the distressed sides of the markets, you've been an advisor with CREDAA for over a year now, and it's been great to work with you. But you're now stepping into a new role with CREDAA. You're becoming the actual managing member, and you're going to be controlling the new direction of CREDAA, which we're very excited about.
The same here. Yeah, we're real excited about that, and. You know, finding CREDAA, you know, I've been involved in a lot of associations, and a lot of this, and primarily in all the associations, being the commercial chairperson. And many of these associations have been involved in the distressed markets, but maybe on the residential side, and they've all been trying to put together a commercial side. And I've been on the commercial committee, and it's, I mean, I don't know if you've been on boards, but that was a whole learning experience in itself, and how they operate and how they function. But it's been rewarding, but when I came across CREDAA, and I said, who's CREDAA? And I got involved and got on the advisory calls and met a lot of great people. I saw a huge opportunity for CREDAA to really become more of a stellar association that, you know, I think can dominate within the commercial distress market. So I'm real excited about that.
Yeah, and we're excited to have you aboard. Anyway, this is J.W. Najarian from the Commercial Real Estate Distressed Assets Association, here with Leonard Manriquez of ALB Commercial Capital and Commercial Asset Management. Have a great day. Thank you. Goodbye.